Meta Platforms and Netflix investors would definitely enjoy this video as both companies have some recent updates. Unfortunately, we heard from Meta Platforms that they are laying off some extra employees right now as they are focusing on this year of efficiency. And for Netflix, there might be seeing a small shift in their advertisement business. All this in today's episode, so let's get started. All right, so we can see Meta right now is up roughly 6.5% on the day, sitting at $192. Year to date, the stock has been amazing, up over 54.5%. And I do want to say, even though the stock is up roughly 6% today, we do see a lot of big tech players up a nice amount today as the market is hearing a lot of macroeconomic news kind of shifting a little bit. So I do believe a portion of the recent Meta Platforms is green today is one, obviously layoffs, unfortunate for employees, right? Horrible thing. But in the business aspect, it means it will reduce some form of cost or expenses, which means the company would be a little bit more profitable and a little bit more efficient there. So we can see that's the main reason. If we take a closer look, the company did share on their blog report some updates on Meta's year of efficiency. Remember, during the most recent earnings, that's what Meta's management mentioned, that this is going to be the year of efficiency, as unfortunately they overhired. They had too many projects going at once, and their cash flow efficiency was dropping compared to how it previously was. So management, especially with the macroeconomics we're seeing right now, this kind of massive headwind in the advertisement market and advertisement wallet size really got Meta to kind of shift things around, just like a lot of growth companies as well. So they do mention that the goals of this work are the following. First, to make Meta a better technology company, and second, to improve their financial performance in a difficult environment so they can execute on their long-term vision. And I want to say Meta, in my opinion, doesn't get too much credit for being a technology company. I do own Meta. I want to say it's probably one of my top 10 holdings, and I'm super excited for that. And Meta, one of the things I get so excited is they are a true leader, if I may say, in the artificial intelligence race, and just a true leader in the technology market. Unfortunately, as consumers, sometimes we don't see their technology kind of evolve or kind of the research papers that they release. But I am super excited as a Meta investor because of them being a technology company. Before we go any further, I want to thank you for watching, and I need your help to reach my goal of 30,000 subscribers by the end of the year. So if you can do me a favor, hit that subscribe button and thumbs up. Also, if you want some fantastic insight into the semiconductor industry, join my other channel, Semiconductor Investing and More, where I use my electrical engineering background to break down the semiconductor market. Finally, I want to thank the Motley Fool for sponsoring this video, and check out fool.com/Jose for the 10 best stocks to buy now. With that link, you get a promotional offer for their subscription service. Now, let's continue with today's episode. And this letter that I'm reading is pretty much meant more for the employees opposed to investors. And the first thing that he kind of talks about is he knows that this kind of environment is creating a lot of stress and uncertainty for employees. And his hope is that he wants to make a lot of these organization changes as soon as possible in the year so they can get past this period of uncertainty and have kind of employees back to focusing on just working ahead. And the way they're trying to do is, first, they're trying to flatten out their organization. And that pretty much means, Meta kind of mentioned it a lot during their earnings call, I believe, where they were talking that they have a lot of middle management. So a lot of middlemen, right? Middle employees or stuff that were not needed, and they were just kind of creating friction. So they're flattening out the organization and making it easier to kind of get from one project to the employee and everything in between, and reducing that friction. So that's number one. Number two is canceling on lower priority projects. Virtual reality for Meta Platforms is a big play. I don't think that's going to shift. They probably had a lot of small projects that we personally as consumers never heard about, and they're going to eliminate that. And finally, they are going to reduce their hiring rate. They do believe they are going to start to begin more layoffs in the tech group in late April and in the business group in late May. And overall, they expect to reduce their team size by around 10,000 people and to close around 5,000 additional open roles that they have yet to fill. So that's a lot of people. Again, right? It's unfortunate on for the employees. But then if you're looking at it as an investor, you're looking more at the business side, and that is going to help reduce a nice amount of expenses. One thing to also kind of understand is these companies, when they do layoffs, they do some form of packaging where even though they might lay off in April or May or whenever, we won't start seeing as an investor the cost reduction until maybe October or later on throughout the year, as the company continues to some way support the employees that they let go. After they finish the restructuring, they plan to lift hiring and transfer freezes in each group, and they're targeting this summer to complete their analysis of hybrid work week. So I do believe right now we are in this hybrid work style where you can work at home and work at the office and just go in between. It seems Meta Platform still hasn't decided what they're going to do with that. And I do believe whatever Meta does is going to be more of a norm to what the overall tech industry is going to do. So if one is kind of interested of how the work environment might shift, definitely take a closer look at this upcoming summer with what Meta decides for its workforce. So I want to say that's probably the main news affecting Meta right now. Now, the second company I mentioned I wanted to talk a little bit about is Netflix. Right now, the stock is up roughly 0.73%. Nothing too crazy, but there are reports here that we saw yesterday on March 13th that Netflix is reviewing its ad strategy and considering to build or buy its own kind of advertisement infrastructure and kind of pivot away from Microsoft. We know earlier last year Netflix and Microsoft teamed up to kind of create this ad product. Unfortunately, it's going a little bit slower than Netflix anticipated, but definitely being a pushback from the current headwinds in the macroeconomics is not helping it with that. Netflix seems to be trying to find ways to shift. In the article, they mentioned how Netflix recently got John Whittingham, I believe is his last name, to be the advisor of the advertisement platform. We can see he started in January of 2023. Prior to that, he was the chief product officer of FreeWheel. And we can see here FreeWheel is pretty much an ad tech solution company that worked especially for the TV ad tech market. So obviously a lot of talks here of Netflix kind of shifting into this market. During the earnings call, we did hear a lot of talk about the advertisement space. Netflix and management did mention that, hey, right now they're still in the crawling phase, and there is a lot of stuff that they need to do before they move into at least walking into the advertisement market. This is such a new space for them, so there's a bunch of technical improvements in terms of ad delivery, validations, and measurements. And they do believe that there's more to do in the next quarter or two, things like targeting improvements, which will be better for consumers, more relevant advertisement, better for advertisers in terms of more value delivered, a better set of offerings on productions for advertisers to buy. So we can see Netflix is very early on into the ad space right now. And this is a lot of big tech that's probably working on the back end. Netflix, I guess, now is thinking which way they should go. I think this is going to be more of a push for Microsoft to really kind of grow their advertisement solutions. And we'll see in the upcoming years where Netflix decides. But this is something Netflix investors should kind of be familiar with. So let me know in the comments below, do you believe Netflix should purchase their own advertisement business or infrastructure, or should they stay with players like Microsoft? Or maybe even if they don't stay with Microsoft, instead of purchasing, shifting to another player instead. So take care, have a good day, and see you next time.